Hello, hello. Welcome back. This will be module 3, lesson 2. And this book is The Best Loser Wins by, I don't remember who it's by. It's by Tom Hogarth. Best Loser Wins by Tom Hogarth. So far, out of the ones I've read, this is my favorite trading book. I like it because he's very no nonsense in it. And he's just like, yep, you're a terrible trader. Most people are terrible traders. Regular people are terrible traders. This is why you have to you don't have to be smart. You don't have to be a genius. You just have to think differently than 90% of regular humans to be a good trader. And I don't know, that just resonated with me. I was like, oh, okay, tell me more. So yeah, let's get into it. All right. So, how the best loser wins. Why normal human thinking fails in the market. All right. So, we're going to go over the paradox of losing, psychology versus reality, bounce back delusion, and accepting defeat gracefully. If you want to read the stuff under, you can just pause and read it because I'm moving on. All righty. So, the paradox of losing. Um, Winning by losing better. So, in normal life, avoiding failure makes you successful, but in trading, how you handle failure is what dictates your success. All right, read that one more time. In normal life, avoiding failure makes you successful, but in trading, how you handle failure dictates your success. You can have a mathematical sound 90% win rate and still blow up your entire account if your 10% losses are catastrophic, right? Basically, this kind of goes back to me saying a lot of traders learn how to win. That is not the problem. Problem is they are terrible at losing. So even with winning 90%, which sounds great, they'll let their losses run so heavily that it just ruins all the profit they made off of that 90%. Best traders in the world are not ones who predict the market perfectly. They are simply the best losers. They define their risks, they take the hit when they are wrong, and they move on to the next setup without hesitation. All right, your brain is wired to lose money. Isn't that crazy? It's real. I mean, if you look at really any statistics, it does prove this. Human psychology is literally inverted. Inverted for success in stock markets. What feels natural is usually financially fatal. Right? We take profits too early. We have that sudden urge to lock in small wins because we are terrified the market will take them away. If you are already a trader, you've probably experienced this, right? You get that little win. Honestly, even with stock investing, period, I'll be like, yeah, let's start investing for the long term. We're going to hold these for years and years and years. And they're like, all right, cool. They'll get into something. It'll go up 5%. They'll make $60 and they're like, ooh, I'm up $60. I'm like, congratulations, welcome. And they're like, should I sell it? I want to take profit. I'm like, sir, madam, you're up $60. It's okay. The stock's doing well. Let it keep doing well. Like, we're in this for the long term. It's gonna go up, but I don't want it to go down. Well, that's too bad because I guarantee you at some point it's gonna go down. You're gonna have a higher amount of money and it's gonna turn into a lesser amount of money. That's just how this game works. Don't sell it. Right? I just had this conversation with somebody in my free group. All right. Let the losers. So another thing we do we'll kill our winners, right? We'll take them out early. The other thing we do is we let our losers run. So this is something else. Any new investors, I mean, even long-term investors, I bet in your portfolio, you have something that is a loser. It's been a loser for weeks, months, maybe years. And it's negative. It's super negative. It has not gotten close to not being negative, and you still have it, right? You still just let it sit there. You done forgot about it just because you don't want to accept the loss, right? We refuse to close red positions because taking the loss forces us to admit that we were wrong. All right. So counterintuitive thinking. To be a successful premium seller, you must train yourself to act completely contrary to your natural emotional instincts, right? Normal human thinking does not work here. So hope is not a strategy. Oof. If we could all just get this tattooed on our foreheads, we'd be much better traders. All right. Holding onto a losing trade and praying that it returns to your break even price is the fastest way to destroy your portfolio. I will read this again. Holding on to a losing trade and praying that it returns to your break even price is the fastest way to destroy your portfolio. The market does not know you, and it certainly does not care what price you entered at. I know everybody's like, man, the market's against me. Oh, they did this. I just got. The market does not know who you are. You're not even a blip on the radar. If a trade hits your predefined mathematical stop loss, your original thesis for that trade is officially wrong, right? This is something I really had to accept, especially with some of the other trades are fine, but this is like really hitting on like your day trades and your swing trades. It's because you'll have an idea, right? You have a whole plan, and it's like, all right, this is why I'm entering this trade at this point because this is what the market has done. And based off of what I know, this is a good spot to enter. It may go down a little bit, but then it should go up, right? And then you enter into it and it goes down that little bit, and you're like, yep, here it comes. Here comes the go up. But it goes down farther. And it's like, okay, well, that's fine. It should go up then, and it drops even farther. And then it's like, well, shoot, now I'm down 50%. I still have a lot more time left, so I'll just wait. It should go ahead and bounce back. That's where you messed up. After it dropped that second time, and it hit that stop loss area, whatever, wherever you had it set at, that's where you needed to close out that position. You were wrong. Even if it does bounce back, you don't want to have that kind of win because that's just reinforcing a bad habit. You need to get to the point where you can go ahead and be like, I was wrong. Even if as soon as you get out, it bounces and goes back up. Oh well. I was wrong. That's why I didn't catch that. If I was right, I would have waited longer to enter and I would have entered down there. But I didn't do that. I was wrong today. I will take my loss to reinforce being right the next day. Do not justify holding it. Capital preservation is always infinitely more important than feeding your ego by being right. Oh, this, like, I don't know if this hits y'all the same if you haven't been trading yet, but I think for anybody that trades actively or has traded before, this stuff should be hitting your core. All right. This is why this is my favorite book. It's just, you're talking to me how I need to be talked to. I'm getting knifed hand by the words in the book. All right. The cost of doing business. All right. When you operate as the casino, a defined loss is simply a standard business expense. It is not a personal failure. All right. If a restaurant accidentally orders spoiled inventory, they throw it out immediately. They don't hold onto it hoping it becomes fresh again, right? They don't give it to somebody and hope that they just don't say anything. They throw it out. Nope. Yep, we messed up. That's a loss. Cut it out. All right, let's do better moving forward. Treat your losing trades the exact same way. Throw out the bad inventory before it contaminates the rest of your kitchen, before it makes somebody sick. Cut the loss gracefully, preserve your remaining capital, and redirect those funds to the next high probability setup, right? Just cut it off. The sooner you cut it off, the sooner your eyes will be open again to look for the next opportunity. All right. And that's pretty much it, right? So, core takeaways from this. Normal psychology wants you to hold on to losers and they want you to sell winners. If you look through your history, you've probably done that, right? It's like, man, I win this. I don't want to possibly lose my winnings. So you'll just cut it off, even though it might run up even farther and give you more money. And the losers is like, ooh, I don't want to accept this loss. Maybe it'll bounce back. And then it just keeps taking money away from you. This is an easy way to blow up your account. Accept small predefined losses immediately and gracefully. It's okay. We lose. I lose. I lost today. I lost today because the market was inflated. And I was like, ooh, man, these prices are looking really nice. So I thought I was taking a safe trade. Honestly, it was a decently safe trade, but because of how inflated the markets were, didn't matter. It just whipped, took me right out, hit my stop loss, and that was it. I was like, dang, that sucked. I'll get them tomorrow. That's okay. Never trade on hope or the delusion of a bounce back. Ooh, never trade on hope or the delusion of a bounce back. Please, please take this to heart. Like, I'm gonna need y'all to go back to this video that I'm making right now after you start actually trading, whether in your brokerage account or paper trading or on a prop firm. Come back to this and rewatch it because you're gonna need this to rejuvenate your soul. All right. Now, in the next lesson, we're going to talk about the mental game, right? Now that you know how to lose gracefully and recognize triggers that will make you want to break the rules, we will identify emotional pitfalls like FOMO and revenge trading. So, again, I appreciate y'all. I will see you. I'll see you in the next one. Deuce.